Foss swing and day trade. This is a quick look at the disclaimer. It is April 26, 2021, Monday, and we're in the final hour, the final 10 minutes of trading today. Here's the disclaimer. This is for entertainment, educational purposes only, and no advice for trading or copying any of the trades that you see on my site. This is just to share the online trading experience that I've experienced as a non-professional trader. I share my account, my results with you so that you might see what outcomes might occur if you're a non-professional trader. It's a possibility that you could have similar outcome, or you could have a totally different outcome. But just gives you an idea. If you haven't traded and you're thinking about trading, you may want to watch my videos just to get an idea of what it's like. If you've never traded futures, I focus mostly on futures trading, but I do trade stocks as well as options. And I have a separate account for stock and options trading. My futures trading account is what I'm showing now. And this is how the day is ending. This was a interesting trading day. We were up in the equities for the majority of the day. The Dow was the laggard. The NASDAQ was on fire. However, and I did rather well. I played the S&P. I did a little NASDAQ trade, but I was mostly trading in the S&P 500 with mini contracts, not the micro, but the mini contracts. And I still have one contract remaining in the S&P 500. Now, I'm kind of proud of myself today because I did show some discipline. I got out of my positions after getting a nice profit today, and I'll try to show you. I had traded S&P 500 kind of throughout the day. You can see there are multiple trades, buying and selling. The blue arrows are the buys, the red arrows are the sells. And you can see that I placed quite a few trades. You can see where I purchased a contract here and sold it here, purchased it again here, and then sold again at the 200-day moving average, which is this red line. The yellow line is the 50-day moving average. The blue line is the 20-day moving average. And I sold out of my last contract here. So I was flat here, and we continued to trend higher. We trended higher, and so yeah, I did a little scalp trade here. I bought one contract and then sold it here for a small price. But for the most part, I stayed out of it. It just kept going higher. And I thought that we would get a pullback. But, I was kind of getting that FOMO, that fear of missing out sensation. And so, I went downstairs, got a snack, and I said, well, I've made some good profits today. I know there's going to be a pullback. I'll just, maybe just get my eyes off the computer, because it seems like the more I watch it, the more frustrated I get. And I'm going to just take a little break. And I came back, and we were still up here somewhere. But then the next thing you know, boom, boom, whew, what a drop. I mean, this just took out all those gains from here, all the way, everything. I mean, we went right through the 200-day moving average like it was butter. We went straight down here. That was a huge drop. Now, I'll have to admit, because I was completely out, I did jump into a contract just before this happened, right there. And we got this steep decline. I bought a second contract here. But man, this just felt like an opportunity. We had been strong all day. And for all that to disappear, and I had my Benzinga Pro on. So I was listening to news, and I really didn't hear anything alarming. All Benzinga announced was that, the S&P was pulling back. And boy, did it pull back. So 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 this seemed like an opportunity to me. It pulled back so much. I knew that there was going to be some bouncing down in here at some point, because you don't just give up a entirely strong day in the market. I mean, the market, the S&P 500 and the Nasdaq were strong all day, and then you're going to give that all up with no significant news to back it up. Just seemed odd to me. Not that we would necessarily go back all the way up to where we were, but I figured we weren't just going to continue straight down unless there was something really triggering this sell-off, like a Fed announcement or some some unexpected turn of events, some announcement from the White House about something unexpected, maybe something to do with interest rates, or going up higher than what's expected, or just who knows what. But anyway, I didn't hear anything. I didn't see anything in the news, and so I figured this. I just figured this would be a good opportunity to make some money, some more money. So I bought 5 contracts down here. So I bought these 2 earlier in the candle. One there, one there. Then I bought 5 contracts down here. It's down here somewhere. I can't. I'm not sure exactly where I purchased the 5, but that's the price that I got, 4176.50. So that would be about right here. Yeah, actually, let's see. Boy, yeah, it's right where the line is. Okay, so it's right where this line is. So 4176.50 is where I bought 5 contracts, and so I had 7 contracts at this point, and we went down further, and it was getting a little concerning. I gave back almost all the gains that I had for the day, but I was confident that we were going to bounce back at some point, and boy, did we bounce! We bounced back, and I sold out 2 contracts at a time, 2 here, 2 here, well, two here, 2 here, and 2 here. And so the majority of that was for profits, maybe a little loss on this contract. And I held on to this contract. So that's the one I still hold. And now it's just slightly in the positive, up $150 on that one contract. So now I have just one contract. That's it. I'm flat everywhere else. I'm flat in the Nasdaq. That's the only contract I hold right now. So so after it was all said and done, this was my profit for the day. You see, $1,818. And I'm at an all-time high in my account, $59,800. Now, So that's my account value now. I'm knocking on the door of $60,000. So, this is an account that in February had touched below 29,000. We're now, um, um, you know, we're now looking at 60,000 as the next stop here. So, so I'm definitely having a good year so far. I did have other trades. That 1,800 didn't come just from the S&P 500. Over in the oil patch, I made a few trades. I don't know if I'm going to be able to find them. Let me see. Oh, here we go. All right. So they were mostly scalp trades in the oil patch. See, I bought here at 42.05, sold at 42.07. I bought here at 41.95 and sold at 61.95. And I bought another one at 61.83, then sold at 61.90, and 61.91. I guess that was kind of a push. So yeah, I thought I did a few more trades. Oh yeah, here was I shorted oil here. Oil had just kind of gone up like a rocket, and I did a scalp short trade. 62.23 was where I sold it, and I bought it back at 62.21. So those were little scalp trades that kind of added to my winnings today. Well, I shouldn't say winnings, but to my profits today. And in the NASDAQ, I did some trading there, you can see. And they were all profitable trades. I won't go into detail over those. So that's what happened today. And I'm very happy about today because last week I didn't make any videos, but I did do some trading. And the last video that I put out was Friday, a week ago. Not this past Friday, but the Friday prior to that. And my account was at 56,400, something like that. And so I had a really busy week at work, so I didn't make any videos the entire week. And I did some trading, but not a whole lot of trading for the most part. However, on the on Friday, on my last work day. My last work day was Thursday night, and then Friday morning, I traded, and I had gotten my account up to 59,000. I'd done some trades that I was really proud of. I worked really hard, but I was kind of tired. It was a rough week at work, and I should have been asleep rather than trading. But I traded and got my account up. It was up to 59,000. I should have been satisfied with that. I had a real decent profit. And I waited to the very, very end of I'll see if I can find it. waited to the very end of the day to make probably the most foolish trade that I've made in a while. So these are some trades I made early this morning in the after hours. Okay, I think it was right around here. Well, I'll just kind of explain what I did. So I was up about 1,600, and I had gotten up to my account up to 59,000, and the market was strong Friday. I mean, the market went up, several hundred points in the Nasdaq as well as the Dow, and I got, and this was a mistake amateurs make, and that's why I wanted to bring it up, even though I'm not able to show it right now. I mean, I'd have to hunt it down, but let's see. Let me see if I can go back a little further. Okay, so I think it was here. Let me see. It's towards the end of the day. I don't know. I think I'm on the wrong day here. But anyway, so I was up. We're coming towards the end of the day. The market's up like 200 plus points in the Dow, over 200 points in the Nasdaq, and I got my share of it. And like I said, I had my account all the way up to 59,000, up from 56. And that 59, over the week, I had gotten it up to 59, including Friday, and with most of it occurring on Friday. And I was very satisfied with that. It was really quitting time. I mean, we were getting late into the trading day. We were in the final half hour of trading. And, I had taken, the NASDAQ was just up so high, I just said, I couldn't believe it would stay up that high and not trade off. And that's what I did a short trade, and I sweated it because it kept going up. NASDAQ kept going up, but then it finally did pull back, and I made a profit on that trade. And it pulled back, and it pulled back just like I thought it would. And for some reason, that gave me a sense of confidence that, I don't know, that I shouldn't have acted on at that moment in time. So I figured, well, of course, when I covered my short position, the NASDAQ kept pulling back. And my thought then was that, well, we've had a nice little pullback. It's a good chance we're going to, pop forward or pop up some, or at least bounce from this pullback, since it's been a strong day. And I made the foolish mistake that I've made in the past. I just, without doing any technical analysis, without examining, support levels and resistance levels, and really analyzing what was going on with the EMAs, even though they're right in front of my face, I just jumped in and bought 5 contracts because I figured, I'll just do a quick trade. One contract just wasn't doing it for me. I was tired of making this little scalp trades, just getting like $30, $40, $50 out of them. I wanted to do a scalp trade, maybe get a couple of $100 out of it. And my buying those 5 contracts cost me. In that last like 15 minutes of trading, I lost the entire profit that I had for that day. I mean, it just zipped away, and I was actually down. By the time the market closed, I was down several $100s. And so I waited until the aftermarket. I was hoping that maybe it would get a little bounce after the market closed. Now this is a Friday. This is a Friday where the market was up strong in the Dow and the NASDAQ. And, you get a little pullback at the end of the day. I mean, common sense tells you that it's a good chance you're not going to get much of a bounce higher because you've been high all day. And the little bit of pullback, you were still up for the market was still up for the day. And if anything, the odds were that, you're going to get a more significant pullback. So it wasn't a smart move on my part. And it was almost like, I wasn't even, um, I really had the sense that making money trading futures was getting so easy that it seemed like no matter what I did, I could, just press the trade button. I'm going to make some money. And that's kind of thought pattern that I had at that moment. And it's just little mistakes like that can rip your account apart. Because like I said, I gave back all the gains for that Friday. Plus I was in the negative. And I had 5 contracts. So I did not want to go over the weekend holding 5 contracts, 5 futures contracts when especially when the market had been up so high on Friday, because we could get a major pullback starting Monday. You just don't know. And so right before the market closed, I bought back. I mean, I sold 3 of the 5 contracts that I had. And I mean, there was literally no bounce. There was no bounce at all. So I ended up, when I sold those 3 contracts, I was, instead of being up $1,600 for the day, I was down $900 for the day. And my account was at something like 56,900. So 56,900 when I had seen 59,000. So that just kind of was disappointing. That's the kind of thing that if you're a poker player, that would put you on tilt. And so that's what I told myself, you can't get in any kind of mode like that. You can't approach futures trading like someone gambling and going on tilt, because you could really get messed up. You take a risk that you shouldn't take. You risk more money than your account can handle. Things go against you, and they will. And you start chasing your losses. That's gambling. That's not trading futures in a way that will be profitable over the long run. So my focus over the weekend was to rest up and to get focused on just, accept that I lost that money and to work with what I had. Shoot, my account was still at 56,000. I had plenty to work with. So, thing was to get in the right mindset and get back to trading rationally. And that's what I did today. And none of my trades today were, in my mind, overly risky, except for that one with the big pullback. That just seemed like a golden opportunity, and I jumped on it. And, it turned out really well for me. But that's the thing, if you make a lot of foolish errors and lose a lot of money just trading foolishly, then when you get an opportunity where it looks like the chances of you making a big profit versus how much you might lose, if you're already down $3,000-$4,000,